So putting the stock picking puzzle together, you want to look for a ROE of 20% to 50% or more and invest in its best industry. Sales plus profit margins plus ROE, an A or a B. So does management own shares? Part of the historical winning industry group. What is currently favored, big or small caps? Is it in the favored group? In a top broad market sector, consumer, high tech, or cynical? Does the company have a new or unique product? So those are the things, and we've got a sheet that I didn't have time to dig it out, where you can like check mark off all those things. Does it have a large backlog of orders? What percent of capacity is it operating at? Have one or two better performing funds bought some shares that they will have researched the company in depth before buying shares? Do you really understand and believe in the company's business? Next, the remaining 40% use charts or technical analysis. Check a daily chart for patterns forming. So in this book, what we were talking about here, Bill said the first part's there is 60% of his research, or how he's picking a stock. The other 40% is from charts. Analyze week by week price action. Add more once it's up 2 to 3% after a new position. So he's always layering into his positions. If it drops 8%, cut your losses. You want a 50% or more increase in trading volume at breakout. That there is very key. Is it a proper base? Could be faulty if it is not. So you want proper bases that are breaking out on heavy volume. An RS rating of 80 or more. The RS line in an ascending angle. Manage your portfolio. Keep your top winners, not the bottom ones. Check the long-term monthly chart to see if it is merging out of a base from over many years. So don't forget to look at a monthly chart once in a while. Top winners will have high earnings, strong sales, and increased profits. So how to find, this is the next chapter, how to find new investment ideas in IBD. Review the markets page. In the weekend edition, learn to use IBD Smart Select numbers to review the stock table. IBD Smart Select has 5 priority ratings. And in this chapter, I had to change it a little bit because the paper is not a daily paper anymore, it's weekly. But it's good to go over and look at these in the weekly paper. And so here's kind of the explanation of each one of these. I just clipped that off the top of the paper. So EPS and RS over 80, avoid under 70. Avoid DE rating, look for a minimum of B. Scan the top of the list and also look for bold stocks. Make a note and do further research on the stocks. So your 1 through 10 there are what we saw in the past one for those ratings. You got something to add?
So again, O'Neill was always fishing in. Oh, it doesn't show up.
Is it on? The battery go.
Battery dead.
I never put one in it.
So the time saver table. You guys have heard me preach this left and right all the time.
Give me the.
So there we go. He's buying stocks that are 99 or 98. That's the time saver table in that oval. The circled in the up column, 99, 98. If you start there, at least what he was saying, 60 to 70% of your portfolio should start there, 99, 98. If you want to try guessing in the other, limit it to 20 to 30% of your stocks. But the bulk of your stuff, if you start forcing that to happen, or at least when you start your purchase, when it breaks out, it needs to be moving up towards that 98 in an ASAP fashion. So what I start with is my scope is 95 to 100, or 95 to 99. So if I'm buying anything less than that 98 value, it's typically going to be a 95, 90. a 6.97. I'm expecting it to get into the 98 to 99 very quickly. If you start there, you end up getting all these other things. Okay? That's the whole purpose of why he had that time saver column developed. And there's another column for the weekly paper called the top 200 composite stocks. Okay? So it literally, it shows you all the 99 and the 98 stocks. You should be selecting from there. Okay? And the best thing about that is find the, I don't think the table has the group rank, but you'll be able to tell with their relative strength. Okay?
So I'm going to go back to that last screen. And what's important, right here's everything for you. So make sure you learn to use that. So you can find some really good stocks early going through those. How to find new investment ideas in IBD. Review the new high, new lows list daily. Found under the stock list tab, click on IBD data tables. We kind of went over that last month, didn't we? Mm-hmm. Review the list of stocks in the IBD 50, Big Cap 20, and the lists you like. So go on, hit the tabs, and figure out, kind of make a routine. Check out your weekly review list under the stock list tab. That's always been a good list too. Pick some really early. Look at the charts of your stocks you made a note of in Stock Doctor. So after you just kind of note them down, and then go back into the Stock Doctor and look through them, unless you have Market Smith or what. IBD has changed a lot since this book was wrote. These are the main points Bill used to find his picks. Growth versus value investing. This is his next chapter. Growth investors buy stocks that show great sales and earnings, preferably of 20% or more, and have an ROE of 17% or higher. That's Bill's own parameters. Value investors evaluate a company's balance sheet, looking for hidden value or large cash amounts. These stocks usually have low PEs and a low book value. PE values reflect the price of the stock compared to its earnings. Low PE stocks are not bargains as they would appear to be. The best stocks carry high PEs. A value investor would miss most of the large run-ups in stock price. It is easier to be a growth investor than a value investor. What about mutual funds? Should you buy growth or value? Just buy a fund with a past track record of good returns and great management and monitor it. Market research has shown stocks with a higher PE exceed the rest of the market. The average PE of the big winner was 31 before they made their large move. Mutual funds are great investments. The key is to buy and hold them. So he was saying, you can make a lot of money with mutual funds too. Just you got to monitor to make sure they're a good performing fund. That's the biggest thing, and who the management is. And it was interesting. He did kind of go over a little bit more about this PE. If you were a value investor, you're not going to buy PEs at 31. You're going to want stuff like 12 or 8. You would have missed all the big winners in the last two runs. You going to add something?
Yeah, one of the things that I would encourage everybody to do is, even if it's an index fund, put 5 to 10% of your money with dollar cost averaging. If you're a Schwab customer, you can start with $1. What you want to do is, when the market is all choppy and you're nervous and scared as hell, you put $1 into the mutual fund. And then when the market resumes its uptrend like it is right now, if you're picking stocks correctly, you should be outpacing that mutual fund performance. You know you need to sell if you're not outpacing your mutual fund. And then you don't add to the mutual fund when you're in an uptrend. You're only doing it when it's under pressure or in correction. So that that's your value. That's how I play the value investing. Because I use Schwab's small cap. It's the Russell 2000 index. So it's the same thing as using the Russell 2000 index fund. And Schwab, the fees, the expense ratios are 0.03%. You're not losing anything to management fees. So I would highly encourage you to do that, because that also holds you accountable. Is your portfolio or the stocks you're holding outpacing the mutual fund? If it's not, then put more money in the mutual fund. Okay?
Don't try to be a jack of all trades. This is the next chapter. There are lots of different investment opportunities. Low price stock, penny stock, futures, metals, bonds, REITs, TV pundits to listen to, market gurus, and trader tips. Always keep it simple. There are over 10,000 U.S. common stocks alone. Foreign stocks carry extra risk. Stocks selling for less than 15 a share are usually cheap for a reason. Institutional money is not put in them very often. Penny stocks are often fraudulent. Options are risky, and only seasoned investors should use them. Limit your exposure to 10% of all your investment dollars. He's talking about if you are going to do options. Bonds are less liquid, and returns are more tied to interest rates. And that's something we haven't really had to deal with lately, is interest rates. What's the right portfolio mix? Don't over-diversify for safety. Stock and a good mutual fund is all you need. Your goal is not to always be right, but to make substantial money when you are right. How many stocks should you own? You got the example, we went through that before. You know, if you have 5,000, you should have 2, 25, 3 to 4, 100, 5 to 6. There's no reason to own 20 to 30 stocks. You simply can't know all you need to know to pick the best ones with so many different holdings. If you see a new stock and you want that is better than you currently allocated positions, you need to sell one of your holdings before you buy the new position. Stagger your entries into your different positions over time. Don't rush in and buy all 5 of your stocks at once. So you got a 100,000 portfolio, you say, okay, I want to invest this, and just rush in and do it all. Don't do that. It's going to take you some time to get in and out of the market. What's the right portfolio mix? The best strategy, let's see, for buying stocks is to pyramid into them. First buy 1/2 of your established position size, then add 30% more once the price goes up 1 to 3%. If it keeps going up, add the rest of your position before it gets up 5% beyond your buy point. I mean, sometimes you will go in with your full position at the start. Use charts and don't chase them up in price. If they fall 8%, sell. This is like an insurance policy. After you own 2 to 3, you must monitor them for the best performer. You can add on new bases. Move money towards the winners. Make buy and sell rules to follow. You will make mistakes, but they will be small ones if you follow your well-written rules. That's probably the most important thing, and takes the most times to learn the rules for yourself. None of us could give any other one of us our own rules. Once you get good at picking winners, you will need to learn how to hold them and add them and finally sell them. That's the problem that the advanced people of us have. This is harder than picking them, but you must learn to hold on to your big winners. Read chapter 10 and how to make money in stocks. I got that out and did read it. That does help. The whole process of learning how to make money in stocks is really studying and learning how to do it. And that's it for that PowerPoint.
So just one more point on the mutual fund so that you guys have that. Stocks can go to zero. They can go bankrupt. You can lose all your investment. Mutual funds will always make a new high. 4 weeks ago, the Russell 2K looked like crap. It was a chart that was under the 50-day living, and it set a new high today. If you put money in that, you'd be up 5% on that investment just by having fear and betting that you're going to make new highs. Are we going to make new lows and take out those lows from a couple weeks ago? You betcha. So when we do, we'll pick points where you can add into it. But that's one way where you force your hands to stay in the market at all times. So what I'm doing is putting about 20% of my portfolio in ETF strategy and the mutual fund strategy, and using that as one position. And that's giving me exposure all the time. But what I'm doing with the mutual fund is I'm basically taking opportunities when it's below the 50-day to add smartly. On the ETFs, I'm going to go over a couple key points here in a minute to show you good ways to get into the market. For buying the dips, like 413 was an awesome way to load up on TQQ, TNA. You would have 13% moves if you had the courage to do that. And I'm going to give you a couple tips on why you want to do that. So,
You want to do this first?
yeah. So leading into that, hold up your book there for a minute. Stan Weinstein's book, I'm going to go over part of chapter 8 just as a reminder of what we went over there. One of the things, chapter 8 basically told you how he's looking at the market on a day in and day out basis to tell him whether the market's choppy, uptrend, whatever. So one of the things he describes is the advanced decline line in two aspects. One is you're going to plot it on a cumulative basis. And don't worry about what the value of these numbers are. It's basically, all you're looking at is how many stocks on a given day advanced minus how many stocks on a given day declined. If it's a positive number, it's going to be above 0. If it's a negative number, it's going to be below, and then you add it to whatever value you start with. So if you change the date to a 5-year chart, these numbers all change. Why? Because the starting point over here in left field started at a different value for the cumulative. This is cumulative starting at that point right there. So in the spirit of Stan using the 30-day moving average, the 50-day moving average, and the 150, 200, the two things that I like is he used the 30-day on a week daily chart and 150 to represent the 30-week moving average. So on a daily chart, the cumulative, you're just looking at this on a daily, there's your daily 30-day return and your 150, which also represents the 30-week line. So when this red line's, when the cumulative is above, you're in an uptrend. Okay? Plain and simple. One thing I want you to keep in mind, since 1929, every time you see this print, and the reason why I like stockcharts.com, if you just set this chart up and keep it as a link, it prints the new highs for you on the chart automatically. You don't have to do anything. It's done for you. Anytime you see that new high, you can guarantee that the S&P 500 is going to make a new high before a market correction. You can guarantee the Dow Jones Industrial is going to make a new high before a correction. That is 100% fact of life. Guess what? This is as of Friday's close. Well, today, yesterday, and the day before, 3 new highs. We haven't stopped going up. So that means the S&P is going to print above 2401, and then Dow Jones is going to break through this resistance before a correction happens and gets above the 2200 mark or wherever the high is. We'll look at that in a minute. But I strongly encourage you guys to reread this part of the chart is 275 to 282. If you use this in conjunction with what we've talked about on the IBD big picture and the psychological indicators, the new high low ratio, and the VIX indicators, then when you see these pullbacks to the 150-day line, you're just screaming with optimism. This is August 13th right here. And on this chart, the advanced decline line says we're going higher. Whereas a lot of things were looking pretty scary on April 13th at the close. If you bought that dip on the TQQs and the TNA, you would have 13% returns at the close today on both of them. That was the easiest trade set up in the world. But this is the chart you have to have. We are growth investors. I put the comp index on here because that's where our growth stuff's going to be. And as long as this is printing new highs, and by the way, we had our first close above 6,000 today. So this chart is as of Friday's close. So it doesn't have the last 2 days of action. The other thing that I want you to keep in mind is I put a MACD indicator on here. It tells the story, guys. It's in an uptrend. You're in a bull cross right here. That's all you need to know. We're going higher.
What about what
Now, one of the things that you,
What do you mean by bull cross?
the 12-day moving average, the fast is above the slow.
Okay.
So the black line is the 12-day moving average, the red line's the 26. On a MACD, so on stockcharts.com,
Yeah.
there's a chart school. Go read the definition on MACD indicator. It gives you a great explanation if you need refresher points. Now, one word of warning. Here's our bear market. You're in a bear cross. See the black line? You're making lower lows and you're below the zero line.
Yeah.
You're below the 150. Look where the 30-day, the 30-day can't even get above the 150-day line.
Okay.
Okay? So this is when you're adding to your mutual fund.
Okay.
Okay? Every time you see a new print here,
Gotcha.
you need to add to it. Now, one of the things coming out, the O'Neill always said when you get the follow-through day after a bear market, the strongest part of the rally, look at this. That's the strongest part of the rally.
Yeah.
Look at the MACD. You go from this extreme to the extreme right there. You got to have courage to put something in. When that follow-through day, that's why he says you got to buy something. Buy the TQQ. You bought the TQQ, you got a 25% move right there.
It keeps you in the game.
It keeps you in the game. The mutual fund is the best play. Read the chapter on the mutual fund and how to make money. He says when you got opportunities like here, take a loan against your mortgage and put it in right there. Look at that. You would have a 25% return on investment.
In a short period of time.
And then go put the money back in your equity
Good idea.
until you get the next opportunity.
You can do
Rinse,
that.
repeat.
You can do that in your Schwab portfolio.
Yeah.
The home equity line too. It's called HELOC.
Yeah. So now one word of caution. We are making new highs. So one of the things that's going to happen before a major correction or recession happens is this will no longer make new highs. Okay? But the indexes, like the Dow, since they're the lagging indices right now, which is the S&P 500 because of energy, and the Dow because of energy, and a little bit of the financials, they're going to make their new high, but this is going to be trending the other way. This will be in a bear cross. Look at the lower peaks. This is called negative divergence. Pay attention to that. When this gets to zero, and this is making, you got to monitor to see what things are going on, and the next chart's going to help you with that. So this is the cumulative portion. As long as it's printing new highs, market's going higher. When this stops printing new highs, you got to be playing defense. You got to be, any position you own, you got to ask the question, if the market dropped 2% tomorrow, what am I going to do with that stock? Okay? But right now, as long as this trend is up, that's why I use the 30-day moving average and the 150. Look at these pullbacks in November. The election was scary. If you started your mutual fund right there on the Schwab small cap index, that was a huge opportunity. Even with this outperformance, that was still a 25% move on the TNA or the Russell 2K or your mutual fund.
Specifically, which one are you using from the Schwab mutual fund?
Their index, the Schwab index
Schwab
fund.
index for
The small cap index fund.
Yeah.
It's the Russell 2K.
Okay.
They're basically mimicking the Russell 2000. Or they have a S&P 500, they have a total market, they have their version of the the Schwab 1000 index. Any of those are good. But the reason why I would go with the small caps, growth investors, you want the small cap, mid cap names. That's the Russell 2000. Okay? So anytime you see this turning up and going into bull cross, you should have, that's the day to add $100 to the mutual fund just to see how it does. That way when you're putting money down here and as you're buying stocks, if you're buying the right stocks, the stock is going to outpace that 25% move in the recovery in the index. If it's not, then put more money towards the index fund or TNA or stuff like that. But you guys want to start looking at smaller entries? So add-on points, when the price action cumulative goes above and takes out that peak right there, and the 30-day crosses the 150, that could be a small add-on day to your index or mutual fund, because that says I am now in a confirmed uptrend. This is your confirmed uptrend signal right there when you have that and you took out that peak right there. Okay? Because that wipes out that head and shoulder pattern right there. That all the bulls saying we still got a lot more to go. Well, basically that head and shoulder was satisfied right there. And looky there, you got a beautiful inverted head and shoulders that sets the bottom, which makes that a powerful move. Okay? And look at this pullback. You got another inverted head and shoulder pattern right there. So when it takes out that peak, be long. Looky there. There's another one. But now when these get tighter and tighter, you start paying attention down here. Look how close we are to the zero line versus there. Okay?
Here's my old thing too. 1, 2, 3, 4 done.
Yes. We're in the fourth rank. Pay attention to that. All right, so the next one. So this is what he called the momentum indicator. Okay? So what I have on here, and again, this is the next section of the book, 283, 287. And what I've done here is this is just the raw data, except I got it the chart type instead of candlesticks or whatever. It's called invisible. The only thing you're seeing is the extremes, the high values when a new high is reached. I don't want to see that oscillation, because what we're looking at, his momentum indicator is the 200-day moving average of the advances and issues. So this is not the cumulative, this is the raw data. And all you're doing is plotting the difference between the new high or the new advancing versus the declining. And you're taking a 200-day moving average of that. If that 200-day moving average is above zero, you're in an uptrend. If you're below zero, like right here, so our bear market ended in February. See how we're hugging the line? The red line is zero. Okay? So I got a red line that's a horizontal line that's zero. I have a green line that's the 50-day moving average. And the only reason why I put the 50-day moving average is so that you can get a glimpse of when the 200-day moving average is in a peak. You see how tight this is? It's hard to see if it's in a peak or not. Well, that basically tells you I'm at a new high. I'm at a new high compared to this new high, but the 50-day is saying I got a pullback coming here in a little bit. So look at November. The 50-day pulls back to the zero line. We're still in an uptrend. This chart is telling you you buy like crazy right before the election. You have courage to buy like crazy before the election. Why? This is still separating from the... And this is important. His book told you to pay attention to this. When this is still gaining altitude, the 200-day is gaining altitude above the 200-day moving or the zero line, you're in a very strong uptrend. What you want to pay attention to is when this starts going into decline mode. So what I did was I spent about 12 hours one day finding all the indicators that would tell me what the performance of that 200-day. I backtested this through several different markets. I came up with, they have an indicator called slope. Don't ask me what, it doesn't mean anything. All I found was that slope at 55 days is giving you a very strong indicator of what that 200-day line is moving, the momentum. If you're paying attention to that, So coming out of the bear market, the best opportunities, look at the slope. It basically ramps to a new high. It told you that was the best part of the money. The next opportunity is November, because you basically scream to a new high taking out that peak, but you're, so to Sam's point, there's one, there's two, and now there's three, and now we got the fourth move going. So this is now at around 7 with today's close. Again, this is Friday's close. So April 13th, right here, when it was making this higher low, pay attention to the slope. The slope's also telling you when the 50-day is not making new lows on those pullbacks that are scary like April 13th, buy. You buy. And you basically had a 13%. If you just bought TQQ and TNA, you had 13 to 15% moves in both of them.
So can you say that again? Yes, it's the 50.
The 50-day is the green line. So I'm plotting on this chart. So if you're plotting the $ NYAD, and we can go into stock charts to show you how to set this up. This is invisible. I have a 200-day line moving average, a 50-day moving average, and a horizontal zero line. And then I got two indicators, price for the comp, and then the slope. You don't need anything else. And what the 50-day bear markets happen when the 200-day hug the zero line or go below. And that's what Stan's book says. If you read these 4 pages, that's what he's saying. I've just put it in a visualized chart that you can look at this every day. So if you're 100% invested right here, that was a wrong thing to do. Because that basically, you already had 2 twin peaks down right here. You didn't make a new high. If we go look at a 3-year chart, this was a substantially lower low. So this told you we were going to go test those lows that were made in August and September with the flash crash. And sure enough, right there. But look at the slope right there. So the comp is bottoming, but look at the slope. Do you see new lows being printed there?
Yeah.
It's telling you we're
Moving up.
fixing to take off. Virtually everything made new lows on February 20th, but there was a lot of things taken off between the days of February 1st and February 12th. If you were paying attention to the time saver table on February 1st through the 12th and looking at those leaders that were 95 and higher, that weekend paper of that, if you just went and looked at all those mini charts in the paper, you should have picked 1 or 2, period. Because this chart, when this is setting up and it's scary, you're going in and looking at the best mini chart in IBD's weekend paper. Your homework assignment, when you see this setup, when it's all scary and the world's falling out of favor, and the 50 days actually making a slightly higher low right there. That's telling you we're going higher. Find the best chart. If you don't know what to do, put $1,000 in your mutual fund, buy $1,000 TNA, buy $1,000 TQQ. If those two are up 7% in the next 3 days, it's telling you the market's going higher. You got a follow-through day coming. Your protection, if you're wrong, you simply put a 4% stop on it. But and you pay attention to these. As soon as this crosses 0, you should be in something. Okay? And then you basically watch the action. And we got a very strong, powerful follow-through day right there. That's your follow-through day on the composite. And the high-low chart, if you're paying attention to high-low, on that day, that's when the high-low recovered 2.0. Guys, we were at 0.01 on the high-low chart. on that day right there.
Okay.
What is this TNA and TQQ? Are those like?
It's the NASDAQ 100 leverage 3X mutual fund,
Okay.
or ETF.
TQQ.
It's the 3X leveraged ETFs.
Okay, and what's the?
TNA's the Russell 2000.
Trip.
So one is your growth index,
Right.
and one is your small and mid cap index.
Right, okay.
And both are growth oriented. It's telling you risk on. So if you want to invest in those, you're looking for opportunities right here for those opportunities. So one of the things that I've expanded you guys already know this, I do a market summary page every day, and now I'm recording these values of these two charts every day. So on the cumulative, all I want to know is price is above the 30-day and price is 30 days above the 150. If not, I want to know what the order is. Okay? On this one, I'm plotting the slope because I don't care what the value is. I can look at higher lows, higher highs, but positive and negative, it's a zero line. When it's above zero, you're in an uptrend. 200 moving average, when it's above zero, you're in an uptrend. You should be long something. The easiest way to be long something is your mutual fund, which is always going to be there. It doesn't need to be a big portion, but the ETFs, and then you're trying to find your best stocks to be in. And those best stocks have better be beating the pants off of the TQQ. So if the TQQs are making 25 to 30%, that means you should have been buying NVIDIA on this breakout so that you got 400%. Okay? You guys got the picture? And by the way, one of the best charts that looked, NVIDIA looked pretty stellar back here when it came back and tested. It basically put the handle right there. You see that breakout and then the retest? That retest was for the bull cross of the 200 going above the zero line. That's why I got the 50-day. I went through all the moving averages that basically showed me. So what I was looking for is on the day that NVIDIA broke out, NVIDIA was the best stock of this market right there, right? Hands down, right? So I wanted to know what moving average on this indicator came back to the zero line and tested that on the day NVIDIA broke out. And it just so happened to be the 50-day moving average, which is good for me because that's one of the things we look at day in and out. So this is also telling you this is the 50-day moving average for the composite. So what do we use on the composite? The core charts for MarketSmith are the 50-day and the 200-day. What two averages of the advances and declines that we're using. And when that starts printing, and this, so you knew you were going into a correction in August when you failed to make a new high. So August was basically the stall going into the election. August 1st was when the signal started coming. It took 6 weeks for that first VIX arrow to show up in the middle of September. Then it took, so you had one VIX arrow show up right there. And then it took you another time frame to see that leg down. And then that last leg right there. Look how weak that rally was on the, and you can see it right there. And it came back and tested right there. So one of the things after the election that you saw was the composite lagged tremendously until the new year, right? If you guys remember that, the small caps went and zoomed. Right. The financial zoom, the energy stocks zoom.
Even the Dow Industrial went.
And the composite just was lagging like crazy. Well, one of the things, you can see that lag right there. And all I was doing was testing the bottom channel of the 21-day moving average, you know, my minus 1%. By the way, this is 13 days of uptrend with no correction. We tested the bottom channel of the -1 line 4 times. Each of those 4 times, you can see them. There are these dips. 1, 2, 3, and there's the 4th one. If you bought all those and just added $1,000 to that TQQ position, you guys would be up around 65% on 5. So that's doing an initial 2,000. Then each of those pullbacks to the -1, you're just adding 1,000 to it. That 5,000 would be somewhere around, I think I calculated it'd be about 11,000 today.
-1 on the 21-day moving average?
Yeah, that envelope that I showed you guys to keep track of. If you look at the close every day, you're in Market Smith, all you have to do is look at the closing price. How far below am I below the 21 moving average?
-1.
So when you see it -1.1, hey, I'm in a correction. I should be safeguarding my inventory. Did it dip below that intraday? Several times, yes. Did it ever close? The closest it came was April 14th or April 13th at 0.94%.
Wow.
Intraday it was -1.05%. This is the best 2 charts, and the reason why Sam and I say that book is golden is because how simple it is. The book that you need to read before you read How to Make Money in Stock. If you know everything about that book, How to Make Money in Stocks is a walk in the park reading.
More sense to you.
It even makes the book that Sam's been going through even simpler, because that is in basic language. And these are the 2 charts of that important, and Stan basically goes in, these are the 2 most important indicators because they're guarantees. When the cumulative makes a new high, pay attention. Now there is a funny chart, and the reason why I bring this up is the auto sector, because of Tesla, is the number 5. You would think the auto stocks are really going. He also says, plot GM. GM has been the bellwether for a long time. GM's in a bear trend. GM's saying it's already in a bear trend. The auto stocks are going lower. Ford and GM are going down. The auto part makers are going down. So this is becoming, we are getting very close to the end. The biggest thing, you see this long sloping, we're getting closer to 0. And oh, by the way, the 50-day still hasn't taken out the 200-day, even with today's performance. I looked at it before I came, and it was still trailing. So I'm plotting those 2. The best thing you want to see is that 50-day get out and stay above the 200-day. You don't want this
green one, right?
Yeah.
Yeah.
But that is the best. This is the best market analysis I can show you guys tonight. Because if you get these 2 charts, it puts your fear at bay. Now, these, you don't go sell everything just because you see this. These are heads up that the trend is waning. You basically, the best thing I would say is you pay attention to distributions. You notice that the paper went back an uptrend last night, but we still have 5 days on each. Yesterday was actually a churning session on the NASDAQ composite almost. Why? Because we made our high at 1 minute into the market yesterday. And the rest of the day we basically were churning. What did we do again? Now today was good follow through because you had good action. But if you go look at a lot of the short-term MACD indicators on all these short-term charts, they're all lagging. They're all in bear trends. So it's... How much of a pullback we get, I don't know. My guess is the NASDAQ is probably going to scream to about 6,200 and stop right there. And that's basically when all the other things catch up. So you got we get crap earnings on Thursday. You want to know how many mega caps are reporting Thursday night? It could be over Thursday night. Because I don't know if you saw what the steel industry did after hours, but U.S. Steel is down 20%. on huge volume. Because they missed, and they missed big time. And all the other steel players, all those that just recaptured the 50-day yesterday, they'll be testing it like crazy tomorrow. Because that was a big miss tonight. So if you lose all the steel players, that means watch VMC, MLM, and those stocks. But just pay attention to these. These are great indicators. So if you're plotting all you do is plot $NYAD. You don't need to worry about the advanced declines of all the other indexes. The reason why you want to use the New York Stock Exchange is because it's got all 10 sectors represented very well. All the other indexes don't. Okay? That's why the S&P 500 is a good proxy for everything. On the indicators, you're putting a horizontal line and you're setting it to 0. You're picking simple moving average, 250. The 50-day will show the new high and new low peaks for the 200-day moving indicator. The other thing that you can tell is these raw numbers on an invisible type. These are the extremes in the day-to-day readings. So when you start seeing these, this is a lower number. The peaks are getting, this has got to, that's going to start going down if you stop printing higher highs, okay? And again, all I did was, I was looking through all the kind of the momentum indicators to find something that would represent the slope of the 200-day moving average. And then I played with the day setting. You can pick anything that you want. This was the best one. And again, what I was looking for when you went from bull trends to bear trends and bear trends to bull trends, how did this look? You wanted it to be setting up the negative or positive indicators. Okay? Any questions?
So November 9th, day after the election, that's below 0 or on 0 quite a while. And the market took off. So it's a lagging, right? Because it's a moving average.
All indicators are lagging.
Right, I understand, but with it, per that, if the rule is I don't buy if it's below 0, you wouldn't have bought the election.
I didn't say you don't buy.
Okay,
I'm looking at this.
you're looking at that 0.
That's telling
Okay.
me market's gaining momentum. This, look, this didn't set a new high. The 200.
I'm looking at the 50-day.
I understand that, but look at the 200-day. The 200's not even taking out these lows right there.
So there's no big deal if it's below 0.
It's telling you we got to pull. We're still full guns galore. You're looking for the opportunity. Look, Thursday is when the mid caps and that Friday before the election, mid caps and small caps outperformed. They took off on that Thursday, November 3rd. You're buying, so your mutual fund buying, if you're tracking if you have a chart of the Y2K, the Russell 2000, you are buying that lowest low on November 2nd. Right there. And that's what this 50 days is telling you is, there's your low right there. That's November 2nd right there. Because all your mid caps and small caps are taking off. You got to keep in mind, part of this lagging performance right there, look at your index. The whole month from November to New Year's, the composite and the Qs underperformed.
So the top chart really, because I think we all agree.
That's actual.
That's actual, so that, November 9th, after election, we all know it just took off, right? And that shows up on the top one.
It shows up there.
On the bottom, I would be a little bit.
On the bottom, the 200-day, if you go read this, you go read these pages, it tells you when you're clearly above the 0 line on the 200-day.
On the 200.
Let me show something that I'm seeing out of this that's kind of confusing. So, if you look right here, okay, so see how fast this 50 got below here, but the 200 kept on? So go up here and look at this. The extent of this was high. When it was flat, it could drag the 50 down and the 200 a lot faster. It didn't drag it down because the 200 takes longer to drag down, obviously.
Right.
So that's something you gotta take in consideration a little bit. So right now, we're a little more flat. If that 50 starts dragging down, your current days are gonna take that 200 down a little bit faster. That's something to look at on here. Now, something else I see on this chart, just me sitting here. When these little dips here, this is my own thing, I count these humps. This is 3. The 4th one is more volatile to the upside. What do we got in the market the last few days? This indicator here, these pull downs, are showing you these little dips. Very clear. That's why this, when he's saying this hits down here, is such a turnaround, because it's those dips. See that? Every time. What's the slope really made of?
Again, all I was looking for something to represent that 200-day
That's
line.
really accurate for showing these little niches. And that's why that turnaround at this right here. Now, have you back tested this? Does it
Yeah,
get below 20 much?
I didn't look at the
Because there's
extremes.
20s, we got a 30 on the top. And if you notice in these, they have 3 on the way down. 1, 2, 3, and most of them too. Which is pretty normal on their downside, 3 to 5. But that's a nice indicator there. So that's kind of, so with this big uptrend, as we start to flatten, the 50-day pulled in, when it starts pulling down this time, it'll pull it with it a little more, unless we continue to rock off, which we may. We dipped right here, not quite as much. Take back off. So you've got this set up, and I think you sent me a link, right? Pre-set
Yeah.
up.
So
I'm going to post that on the meetup, on the page for tonight's meeting. So all you got to do is click on it and load it and save it.
and then just save the link.
When I get a chance, it might be a day or two. So
Does that make sense to everybody?
it's a little bit.
If you got your book,
He sent it to me, and I had to read the book, and then I had to look at it a little bit, but it makes sense now more since you explained it. Let me see if I can find it real quick. Otherwise,
or we can just go to stock charts and I can show you how to set it up.
I don't know if we want to get into that. We're gonna run out of time.
Well, you set that chart up yourself, though. That's not something that,
He
Yeah,
set it up, and
I-
that's why I'm saying it's just for me. I like
well,
Link.
you said it right here, how to set it up.
You want to do?
It's you have to know the stock charts to how to enter all that. Do you know stockcharts.com?
No, I use Thinkorswim, but, yeah, I can,
A lot of software packages.
it's not gonna have.
Hey, all I'm saying is not all the software packages give you the raw data. Stockcharts.com is one of the few that gives you the raw data and the cumulative
See, I
data.
actually think you sent me one. I don't think I got both.
That's a different one.
Yeah, I don't think you did
You
send
push them
me.
as-
I didn't send that link.
Well, send me those. So
It's
let's
just a
go.
matter of the slope of the two investment, right? I can pull that.
If-
Thinkorswim.
If we can do this fairly
Yeah.
chats instead of charts.
Probably like that, somebody's got-
Well, see, what I've been doing, he sends me this stuff and I set it up in my Fidelity.
200.
You know, it's probably gonna be quicker. You just come over here and do
Yeah,
it.
hundreds of indicators.
Because I'm not that good at that. For me, I'm a simple person. I just take the link and look at it and compare it. And this is it. We're not adding anything. Right, Dean?
Well,
Because that's the last thing out of Stan's book from what I can see.
so going down to the setup. So you're using daily. You can pick any time frame you want. You're using invisible, simple moving average, horizontal line 0, and we're going to put another simple moving average, 50, slope, and then if you want both the S&P, or if you want the Russell 2000 or whatever, you can actually, I don't,
Try to get one more.
so that's the Russell 2000. So looking at those same buy points on November, you can see there was the dip. And look at it, you basically went in a tight range right there. This was about a 5% correction for the mid caps in the Russell 2000 and the small caps indexes, where the S&P 500 and the NASDAQ basically just struggled to get below 3%. And April 13th, that was the day these indicators, that slope, look how the slope is hugging the zero line on that date. I'm just talking about, oh, so the other nice thing that you can do is if you click inspect, yeah, I am trying to combine a desktop action with a laptop action, and it's not working. There we go. So then you can find August 13th. Right there. See that wonderful buy opportunity? The slope's basically hugging the zero line. You're making fresh lows in the Russell 2K and the Y2K. And you want an indice to track for put call ratio in stockcharts.com instead of waiting for the paper. So this is the put call of equities end of day. When you see this, print a close above 9.0. Those are also golden opportunities. Look at all the, it tells you when the peaks are, or when the dips are. Anytime this is 1.0, well, this is the bear market, so the whole month of January and February was above 1.2. But this 0.99 reading was on November 2nd. So this is when, this was the day to buy the close for the Russell 2K because of that 0.99 reading. And August 13, 0.96. So after hours, when the market was still crazy, when this updated, this could have been something that you could have gone in and said, based on the put call ratio. I find this one to be more sensitive than what IBD's paper uses. IBD on August 13th was 1.03. Their signal is typically 1.15. Because of that weak signal, that's another reason why you basically, after we get all the indices to new highs, we probably got a pullback of some type coming. Now, Could be they don't like, Trump can't get things through. But that's the way to get those set up for you. Does that help? I hear quiet.
Clear as mud.
Where's mud? What was the put call? How'd you put that in? I can't.
$sign CPCE. Equity, it stands for put call ratio for equity only, end of day. You're looking for the end of day value.
So what should, if it's high, you need to get in?
When it closes above 0.9
That means
as a
there's lot of fear.
standalone, that's priceless.
Okay.
So doing that in stockcharts.com on a line chart, so that you don't get the day it'll tell you the extremes.
Could you use that to add to your mutual funds or the index fund?
Yeah. So, Sam, move that down and just convert that to a line chart. Go down, down, you're going up. Type, invisible,
Losing me already.
Where we at?
right here. Invisible, hit line, solid line, update.
Wow.
So if you put a horizontal line at 0.90,
Okay.
it basically,
So it makes
especially
sense?
once it doesn't work when you're in a bear market. You gotta wait until the bear market runs its course. But once you're in an uptrend, that's telling you when these pullback, look at, it's
that's
priceless.
priceless,
It
absolutely.
called the low.
Mhm.
It called the low. It called the low.
Interesting. So this is when the extreme fear is there, and then you need to buy.
So unfortunately, this doesn't update until 45 minutes after the hour. So you can't add to the mutual fund 45 minutes after the hour. You gotta have that order, but you can certainly add it the next day. But if you're watching that value, the last 15 minutes, and it's running that high,
But you can add the TQQ right there, right?
you can go in after hours and get a good buy on the TQQ or TNA.
The thing is, the day we are looking at this, we don't see the right part, we only see the left part.
Right.
The day
Yeah.
Yeah,
But
we
then-
don't see any
Yeah,
of
yeah.
those.
But that's the point of what I'm telling you. It's called fear.
Yeah.
This is
fear
O'Neill.
ratio.
All the great guys tell you basically, you want to be greedy when everybody's fearing. So this is telling you the whole world just bet the farm on we're going down to a 20% crash. The next morning the market recovers to new highs,
Which makes them cover their position,
Which-
which
makes it go to new highs.
You know, I
You
always
get too
thought the put call ratio, is it always favors, does it always bias in favor of calls? Because 0.9 seems to be less than 1. Somehow in my
It
mind, I
is
thought it
in
should be more
favor,
than
it
1.
is in favor of
It's
calls.
skewed to the favor of calls.
I'm going through a whole bunch of option stuff
Okay.
right now, and it's about 20%.
Because I would expect it to
To
be
the call
over
side.
1 for adding.
So
No.
bear markets end with values over 1. January and February, there's your two peaks, and they were actually before you got to the actual lows.
Gotcha.
So, to answer your question, yes, it should be over 1, and it was at the bear market lows. Guys, we just had a 3% correction in the NASDAQ. We just had a 3.5% correction, and you got that reading.
Okay.
5% in the mid caps and the small caps, and you got that reading. You just made new highs in all those. Right here, what was going on right there at 1.0? Brexit.
Oh, that's it.
And all the polls were wrong. What was going on November 2nd?
Trump.
Trump. And all the polls were wrong.
What was this one?
That was the French election.
French election, right. What else is coming up?
That was the Good Friday, Easter weekend.
It's the puts and calls.
The
The bottom line now, the bottom line, that's the puts and calls.
Look, the if you were looking at all the charts, you had a nice 5% tight action in the mid caps, MDY, IWM, IJR for the small caps. And the slope also on this is telling you that the fear is wrong on the long trend. But look, it called the low. That day right there, we were at minus 0.94% below the 21 EMA. So you were within 0.006% of going into correction. That's called a stick save in hockey. So if we look at the put call ratio, so the general theme is the fears, it's getting tired of this politics theme, because that's what this was in all those cases. So the fact that you're getting lower readings is also saying that eventually the tide's going to turn. So you want to go through the indices a little bit, or?
What was that IBD page you had? Is that the way it's the format for the daily update?
Well, this page here, it compressed it. Normally this wouldn't be here, but here's all your tabs.
Is that an advertisement or is that the actual page?
That's the page, but these tabs,
I've got that.
this isn't for like an iPad or what. When I put it on the screen, it compresses it. But it's still the same, so here's all your market trend. And probably the first thing
How do
you
you
should
get that to pop up? Does that pop up on your screen?
well, you hit this little thing here,
Where?
right here.
Oh, thanks, that'll help me.
Okay, now, first thing you want to do, and let's go through the market, the put call ratio and all that. As soon as or do you want to go into?
Yeah, that's fine.
Because this is kind of how I do it anymore. And I do tend to read, like it's telling you there that one of them, earnings were beat on some stuff after hours. Those are good to read. It has to think about it. And normally I'm on widescreen, but this projector smashes me flat, so we got,
What are you looking at, last weekend's paper? This week's paper?
this is today, right?
So that on the other extreme of volatility, you just saw the VIX correct 30%. So to expect it to continue to go down 30%, no, you're on the other extreme now. So one thing that you don't want to get slaughtered being greedy.
What we're gonna do is go through what I go through every day while we're doing this, because I don't have time to do it tomorrow because I'm farming, so we're just gonna do it right now, which is what.
That's
Do it.
That's good.
All right,
That's fine.
and that helps me too, because I'm not gonna. Yeah, I don't have time. So
All
I
right.
actually wrote those numbers down from that page, 4 of them. The top 4 of those, I just wrote down. And then I've got them all in here from how long, and I can go back and look at them. That's what Dave's doing.
So
then
just
And I-
you know you're a day behind on the
Yeah,
high low.
I know.
That's fine.
Okay, and now, I don't always open these except when I don't always go in here. Dave's got more time than I do. I don't always open these and look at them.
So go look at symmetry, guys. So we just came pretty darn close to taking out that low right there. But you definitely took out those lows today because that was at 10.2.
That's a big drop.
So this was about a 27-28% correction from that. So here's your 3 sets of 3. And the reason why this kind of baffled me, because this correction was basically a long ass triangle.
So you think this is the 3 here?
That is they go in sets of 3. I will tell you that right now.
So they can be that far.
And how you know it's a set of 3? Because the last 2 always are back to back. And so you have it set, and then it goes below the 50-day. You're looking for the close below the 50-day. There you had it. And then you went right back up. Typically, it's less than 2 weeks for the second arrow.
So is this one further apart than normal right here? Between
That is the longest since they started this, but that is similar. It just depends on what that drawn out correction looks like.
So now we reset.
The reason why it's kind of an Elliott wave, you know, you're
Mhm.
1, 2.
3.
So the correction between 1 and 2 was about 1.5 weeks. So Elliott always has a theory where you alternate,
Right.
where if you're quick and very fast, you're slow and drawn out. Well, I would say we were just slow and drawn out during those 3 months. So the put call ratio, you see how we didn't get the same signal? I don't know where he gets this data because I looked at all the readings coming out of the Chicago board. I don't know where they get their data. And quite frankly, it changes about 5 times during the night. All I know is when that stock chart's reading at the end of the day is at an extreme above 0.9, it's telling you something. So everybody's getting giddy again because now we're getting down close to the end. So before we go into major correction, you're going to see this do what it did in June of 2014. Right before oil dropped in 2014, you're going to see it close below 0.6. When you see that close between 0.6, if the Dow and the S&P haven't made their new high, you want to be starting to look for exit positions the day the S&P makes the new high, because the correction is going to be coming at some point.
So this will be prior to predate the correction
This can be 1 to 3 months,
before.
but a 20% correction or a whatever, you're going to see that 0.6.
Before the actual correction happens.
Yeah.
So
What about today? We have new highs, too?
These are, look, all this is just normal uptrend stuff. I pay no attention to any of this. I get excited when I get a point below 0.7. And these have all stayed above 0.7. Even at 0.7, I don't care. I want to see, I'm going to get worried at below minus 0.6.
That is, people are buying calls. Like
Yeah, everybody's going to be giddy. So what's going to whatever Trump announces tomorrow, getting that through Congress, the fact that they're going to have to do it with all the Republicans in the Senate, which means they got to go through a different procedural process that it's going to take forever to get it done. So the market's going to rally, but at some point,
They don't realize that.
So there's nothing really to look at.
look, right here. So look at that date. This spent 3 days, and that was the second arrow. You didn't even get the correction like you did right here. There's the second arrow. There's the reset. There's the third arrow.
You know, more valuable of this thing since I started tracking is just the raw number of major page. Because you watch that go up, and you watch it come down.
Well, actually, the third VIX arrow, it stopped at 2.0.
So
After it broke back
this
above
2.87, what's the highest?
That was
got
on
to?
13.
13, 14, 15.
He's right in there, yeah. It's good Friday.
It hasn't been there in a while.
Because I wasn't tracking this real close until recently, and now I've got it all written down.
15.96
What day?
on the 13th
Uh,
of April. The VIX hit 15.96. The high low was 2.53.
no, we weren't talking about the VIX. We were talking about what the peak was in the high low. The
Oh.
peak in the high low was
Look at the high
13.
low. Oh, that's way back.
Yeah. You got a phone call soon.
I don't want to. That's a long way back. But yeah, I remember that. That was. What day was that?
So it's interesting when you start tracking these. So are we done with this part?
Yeah, when it peaked out, I was thinking about, you know.
So they
oh gosh,
update the
we
indicators
should sell
every
everything.
day, every day?
So what you wanna do is just hit market trend, and it'll pull this page up, scroll down, and they're right below the big picture. Then what I do is hit the big picture and read that
This is every day, right?
every day, yeah. But I do it about 7, 8 o'clock. So like he said, one
At
of
night?
these, yeah, one of these indicators is a day behind, is not.
The high-low
Well, it
doesn't
updates
tell
at 11 o'clock tonight.
Yeah, well, I'm not getting up to midnight.
I'm old.
You're up, you already get it.
All right, so we peaked at 12.47 on February 22nd.
Yeah, but it's interesting to watch that move as the market's moving, once you start
Yeah.
tracking it.
That's
It gives you-
why, that's
And you
why.
probably, you know, just as long as you keep track of it. So I tend to do that, and then I kind of read the big picture, and let's just, maybe for Graham, we'll read the big picture, put it low.
Watch the video.
I don't always watch the video, I can't stand watching them.
No,
They drive me
I've got
nuts.
my market, stand.
So, just so that you know, the high-low is something like an 8-day or a 10-day moving average, so it's a lagging indicator. So if you're tracking the highs and lows and you know that the highs and lows are going higher, and the lows have started peaking above 50, you have an idea of where it's going.
But I don't like
Well,
it messy.
You gotta trend.
We can watch that if you want. Now we didn't.
Well,
I sent them a
All
message.
they talk about is.
And they responded. They said they cut their ads by a third now. And they're not gonna show you the same ad in the same day if you're a paid subscriber. Cause I told them I'm gonna meet up later and everybody's upset with this. that they have
You've
to-
got clout then.
Well, they said at least they're not gonna send us, see, and you're forced to watch these.
now they put the
So I don't know
stupid
if you wanna
things.
listen to this. Sure. Oh,
We
yeah.
have,
I actually,
show me how to bring up markets.
Sometimes
then.
it's
I'm
faster
paying
just
for it, I
watch
can't even get a chart up.
I didn't wanna skip, does it there?
Right, yeah.
Now it's got a low.
By the time.
I disagree. I like it.
oh, isn't this cute? Now they put that in front.
Hello everyone, it's Melissa Corum here with Elaine Lowe, and we have a look at the stock
I actually gotta
market
make
today.
a-
I don't know if you guys wanna watch this or not. I always read it.
Taking a look at earnings reports.
I always see what they're wearing then.
He said it's getting better, so maybe.
They've gotten a lot better.
He said they're getting better.
She should have been it done.
They got some better.
Closing at 7/10% to clear the 6,000 mark for the first time, as the Dow peaked above that 21,000 milestone again with a 1.1% jump in today's action, closing just below that level. The S&P 500 gained 0.6% as it nears the 2,400 first time in almost 2 months. And that's the NASDAQ that you see there on this Market Smith chart.
Yeah, and as you mentioned, Dow on fire today from those earnings reports, which Ken and I talked about. Caterpillar, McDonald's,
So it's not just
so
my
make sure to watch that market update for all the details, as well as a look at how
Mine does.
Netflix did today. It also had a really big day.
All right, and some earnings out late. Chipotle swung to a bigger profit, beating on both the top and bottom lines. Illumina met profit views but topped on revenue, and both Stryker and Wynn both came out ahead of forecasts. For the full details on that and Arconic, another name that reported after the close, make sure you check out investors.com.
And also issuing its results out late, we had IBD 50 member Maycom Technology, that is in PSI. So that was in buy range intraday ahead of the report. And after the close, we saw the chipmaker revenue up $186.1 million, and adjusted earnings of 63 cents a share beat expectations. And the outlook for the current quarter was in line with expectations. Shares were unchanged late after reversing fractionally lower in the regular session, closing just below that 53.90 cup entry. All right, we're having a little bit of an issue with our lower thirds coming in over the charts from our control room, so bear with us.
So if
This
they're having
is
issues, we're gonna quit watching. So this is always good to read through.
So one of the things, just to let you know, all the distribution days are still there. So if we see a cluster of 2 or 3 come up, start paying attention to that. You want to see a cluster of 3.
And I don't like how this jumps
How
around.
many does it take before something happens?
Is that a distribution day?
If we get 3 to 4 in the next 2 weeks, that's enough.
That's 9, 8 or 9?
Yeah.
So cat sorting.
Well, about 4 of those are going to fall off in here shortly.
Oh,
Thursday,
okay, thank you.
Look.
So here's your stocks, this is where you find them a lot of times in this article.
So let's look this.
There's his first tariff. Yeah.
That's big news.
All right, so one of the things in the pullback that I'm going to give you guys a watch.
So this is actually the next thing I do here is open this.
So the IBD distribution,
Let me get, maybe we can actually see it.
so all these pullbacks, we basically, this is held around 575 A's to 600 A's. When it breaks through 575, we got a significant correction coming. The biggest worry that I see right now is
You're
the
saying
E's,
you're saying when that pulls back to 575?
we're going lower.
Because it just pulled back right to 600.
That's what I mean.
Bounced off of.
It's been bouncing off 600, that 590 to 600 level. So I always add 20 units to whatever level of
So what-
support. So 595's been around the
What it does
lowest.
that is the B's already,
The
because the B's have been higher than the E's considerably.
This peaked out at 65% when you combine the A's and the B's.
Okay.
So we're at about 40% there, 41%. You're about, with this move right, this is based on Monday's action, so you're probably at about 12.5 to 13.
You've been watching.
What is
this
575, what is it?
I didn't hear what?
What is 575?
When the market has a distribution day, the A's are going to fall off. So when it drops down to 575 or lower, I would be protecting everything I own, except for your mutual fund. The mutual funds you hold forever. That's how you stay in the market. If you're in leveraged assets on the long side, I would be protecting them. What hasn't happened in a long time is this ratio of the A's to E's has not gone below 1. Just like that, the reason why I pointed out the 200-day moving average of the advanced declines, if you read Stan's book, the longer that stays above the zero line without a meaningful correction, the more significant the correction when it does cross zero is going to be. So we haven't gone, the bear market on the S&P 500 was 15%. The Russell 2K and the mid caps were 27%. So somewhere in between there, we're probably going to get the NASDAQ and the S&P 500 and the Dow. They're going to have 20 plus correction. The small caps, mid caps are going to probably have 30% corrections. Pay attention to that number and that number. The other thing that I just discovered is if you add the total up, it's the same thing as that 200. When it goes to new lows, you're in a scream for your life. Because when the total, so back here, back over here in January and February, there was only 6,000 issues that made up this list. Why? Because a lot of stocks fell below the $5 mark. So they dropped out of contention for being considered. Right now, we've been in a range between 63.11 to 63.75. So now that I see these numbers, we just broke out to the upside, so we're somewhere around 6,400. So when this drops again and takes out 6,300, when it drops below 6,300, I'm pretty convinced you're going to see a full-fledged correction take hold. Now what's that mean? It could be just an intermediate correction of 7 to 8% on the S&P 500. Okay? But the Russell 2K mid-caps came down to the 200-day moving average. The S&P and the Dow went below the 50-day. The composite went below the 50-day 1 day. So the next time you have a correction where that 50-day is touched, it's not going to stop at the 50-day. It's going to the 200-day. Okay? So the S&P's got a date with the 200-day very soon. And those two, the reason why I showed you Stan's charts was so that you guys aren't surprised by it. You don't have to wait for this meeting to hear that analysis. You can track it daily. It will let you know it's coming. Okay? So this will print below 0.6 if it's going to be a full clear, we got a recession and at 20% or more. If you don't see that reset, then it could just be an 8 to 12% correction, interim correction, okay? Pay attention to that right there. The other thing is, this is the longest I've seen the NASDAQ stay in the B to A minus range. You're at 110 days of that happening. So that's been kind of rare. It's been a long time since we've seen that. Okay? So the other reason why on April 13th was bullish, look at this RS line on the mutual fund. You guys got access to this every weekend if you get the paper. If you're paying attention to this, look at you're making higher highs on the RS line for the mutual fund index. So in January, the reason why this kept going down is because the large caps weren't participating. It got a boost when the NASDAQ started taking off. Then in January to late February or early February, you started losing the small and mid caps. Well, that's where this line stalled. So around April 13th, you just broke out of new highs, and that's because the mid caps and the small caps are outperforming now. So the NASDAQ, yeah, 60-25, great, but it was only 0.7. Russell 2K was 1.2, 1.3%. The IBD 50 was 2%. Yesterday, the IBD 50 was 2%, and the small caps were 1.3%. So that's one of the things the mutual fund basically told you that was happening. So is this next on your...
Yeah.
So one of the things that you guys need to be paying attention to is the sell side of this.
That's not where
Yeah, I was surprised. I didn't think
that's
you were.
not where
Where were you going?
I want to go to the data tables.
Okay.
See, it's kind of messed up that they don't have that top.
Yesterday's time saver table was priceless because the sell side had a crap load. Although it wasn't the comp leaders, it had a lot of the middle range selling off on huge volume. And the buy side yesterday, you had no leaders with volume. They were all minus readings.
So right now, I mean, you should be pretty much fully invested though, right? I mean,
You got 5 distribution days.
market's in an uptrend, it just went in an uptrend.
The bad thing
No,
on this,
Well, you can
uptrend.
get out of it early.
No. It wasn't a follow-through uptrend. It was uptrend resumes. It resumes uptrend. That's a heck of a lot of difference between follow-through uptrend, where you've had all the selling going on. You basically, the E's haven't corrected.
now,
I understand, but I'm gonna be fully
on this,
invested right now. that's
since
all
it
I'm saying.
smashed my screen and it doesn't have the percent change, which what I do is I go in, so today, 95 and higher is all of them.
That's the one from yesterday.
Yeah.
Yeah, it's
is
not
right.
updated. So I can tell you, all these are, there's 3 out of all those 50 that are .96 and above. that are triple digits.
The lamb research is one. Okay. Chip makers.
And so you said there was some down in here of the shorts.
You mean on
Well-
the volume?
No, I go up. So the highest sell-off right there, this is today's because this was 98. Look, today you got leaders
4.
selling off.
You got 4 yesterday, you had.
The timestamp said 5:59, so that basically
Yeah.
told you it's
Yesterday you
updated.
had 0.
Yesterday you had 0 and it was 90, but they were all high volume.
Yeah, normally you got another line here gives you +%. So what I do is I write down my 2 numbers and I go back and look at what was it that had volume. That's how I'm doing it. And
So in this
is
setup,
11.
there's an easier way to do it. If you go to stocks on the move and expand it,
Yeah,
it
I
gives
do
you
that.
the volume.
I do that too. Oh, you mean here? I don't want to do it here because of the lock us up.
Okay.
So there's time, see, that's why you.
There's a scroll you can do this way to get the.
Can you scroll it right
Yeah.
there?
Yeah, make it,
The
move
slide.
the slide to the right.
Why is
No,
this?
no.
Hang on, yeah.
Not move my new eyes list. When you do it on the same computer all the time, you know where everything is. Because we got to get on with the meeting, I don't want to get too far into that. Or whenever, it'd be 9:30. Be throwing us all out.
Should we start doing
Yeah.
So Sam, you need to send them another email bitching that they broke this.
Yeah, what happened with that? I noticed that yesterday.
So this is a good improvement. You're now up to 600, but we're still well below the peak from earlier. Although it
So
is.
yesterday it was 240.14, 251.26. And yeah, I don't know what happened to this. Or are these, oh, look at this. Here it is.
It was still loading.
It's still loading. There. So we got
So that's a
retail.
good sign.
That's McDonald's. Depot. D&D. Medical's made it up in here.
I think financials.
There's banks, 21. So this is good to run through and look at. You feel like you've missed them because you go look at them, all the new highs. Log me in. Jack Henry's back in there. And some old ones coming back.
It's all the chips.
Lots of chips. Finance. So you just got to click on those to expand what it is. There's wind in there.
Oh, that's good to know.
There's our Marriott still moving on.
So you clicked on new highs?
Yeah.
All right.
See, I didn't know that yesterday either. There's a machine. Look at all of them. So let's get down to the new lows. It's good to scroll through, and you can do this pretty quick. I mean, you don't have to be at home or anything. Pretty easy. So you had to do each page. Wonder why they did that.
That's a damn great.
Yeah. Because before you could scroll through both lists. We may not want to do all that.
There's got to be some real slackers in the new loads.
Yeah. I don't know that we. Well, let's see what it does. If I can get it to do it. Now I'll probably open that whole thing. But if you guys send them emails and tell them you're in this meetup group with a bunch of other people and they all agree with you when you got something. Just because it does carry some weight. Because they don't want a bunch of people. I told them the thing's crap anymore. It bounces all over, you're flunking ads. It's just ridiculous. And we pay.
And the news, evening news, the recording is very poor.
Didn't load good.
Unless that's the only one.
You think, no, it can't.
There
Here it
is-
goes.
There was a crack one.
Nope. It's doing something. It's just too slow here.
So that's a better improvement.
Well, see, I think it's only showing the one. I don't know why it's doing that. Then from here, I go over and do the markets, so we're going to do that now.
So we're probably going to go test 2200. So with today's close, you're about 170 points from the new high. But volume's unimpressive. And these can be exhaustion gaps.
That is a powerful move though.
The RS line, if it is a powerful move, the RS line will take out to new highs and volume will come in. So what that means on this and the Dow, the energy's got to start playing. So who comes up Friday? The big boys, Exxon, Chevron. We'll see what they have to say. Now this is a little better. Volume did increase versus the expiration volume. And you are surging. So island top, you want to watch for. So we're 12 points from a new high. Again, volume decreased tremendously today, so that's a warning sign.
New highs on low volume.
Mid caps, it doesn't have today's action, but you did get on the mid caps and the small caps, you did have a follow through day yesterday because you never took out this low. The volume was higher, the small cap index surged, and it was a big move. So today it had a follow up of 0.63. The Russell 3K, you just want to see this continue to make new highs. Russell 2K, volume was better. There's your follow through day, above average to new highs. 1411, that was the close today. So is that today's date? Can you click on that?
Yeah.
Okay. So
RS line's starting to look better.
that was good follow through for the follow through day yesterday. So day 1, day 2, day 3, day 4, and there's your. Look at this was another sign that this was leading because you're making higher lows. Pay attention to this line. Watch this chart because if you can't take out this peak here, that could be a leading indicator. The moving averages will let you know as well. The large caps, it hasn't updated. That's why that's lagging. 85 index, you want to see this get to new highs. It hasn't updated today.
David, what is the 85?
It's their screen of RS 85 and EPS 85 above $10.
Under stock lists on the regular thing, there's a 85 list. That's a really good list to go through on the weekend.
It used to be your weekly review.
Yeah, it was in the paper on your weekly review, and you used to tear out the circle and then use the paper. But now you just got to go in there and go through, and they'll actually mark up some of those charts in there for you. So it's a good list to go through. When you have Market Smith, you have the Growth 250. That covers it better than it's some of the same stuff.
Grains are hurting.
Yeah, grains are.
I'm short.
And there's your metals and minerals. So where do we want to go next?
Let's see I want to see the financials. There, the banks.
Okay. Now this is an area you can turn around here.
So that's concerning.
Bottomed out for the, yeah, I like
It's
it.
getting rejected at the 50-day
Let's
moving
look at
average.
it on 5 minute. So it opened in the morning, pulls
Two
back,
back-to-back
did not-
days.
Look at this. This is not a good thing. Yeah. Closing like this at the end of the day.
That is ugly.
That's ugly. See, and this is a similar day, but didn't get the volume coming
Well, you have the volume, but it's churning.
in. Yeah, it's not like this. This is really.
Oh, yeah, there it is, right there.
Yeah. So 2 days of that already.
Ooh, that's ugly.
So I use 5-minute charts some on stuff like that. When I see one of those, I like to know was it the beginning or the end, and was it volume coming in. I don't go any lower though.
So everybody pay attention to that chart, because if that can't get above the 50-day moving average, is that the same one or?
No, this is super region.
So same thing. There's a algorithm
When it's bouncing
that's
off of that 50 line. It's got to take it out, but this is not good for it to be able to do it.
that's not good.
Selling into the strength. There's Code
Yeah.
Here's home builders.
Yeah, that's it.
That has a nice finish. So just to compare on 5-minute, I know we don't usually do this in here, but ooh, see now that's not good. So we look at this on a daily. This is why I like to do this. This is what I do with my own stuff. So that don't look bad, right?
No, it's
Close
pretty
kind of
good.
towards the top. You hit a 5-minute. You don't have to do it on all of them. The main reason I do it on this one is it did it yesterday and you could see it in the day.
But look at
Wow.
Lot of
look at your
so
volume.
that's some big boys coming in and unloading on it.
But they had 2 great days of gains. I mean, they're gonna.
Alright, so they're taking their
Yeah,
gains.
they're gonna.
Yeah, and it's not saying.
So,
roll
you know
over,
what?
but Be cautious.
Well, that part of that is the tariff that was implemented on lumber.
Yeah,
Right,
that's right.
yeah, home builders. Yeah, and that probably happened later in the day. There's our first tariff. Healthcare, which, did it get a close above? 39%. Oh, so some of the rally late in the day pulled back, didn't it? No, there ain't enough there.
What's gonna happen
With
tomorrow?
that many gains, you're gonna have people taking profits. Bye!
Let's see what transport's
Like with
Let's look at the
computer
semis.
stuff. In the semis.
Whatever's in here, I should probably readjust.
The reason why I wanted to go to the stocks on the move is you had 3 transports explode today
And we
on
can
the
do
downside.
Oil and gas.
Hey, look, that's good. I wish that volume was higher. Software's doing good, but ooh, that's ugly. Let's see where that volume was.
Oh, I hit the button.
Alright, so that's good, closing at the top. You want to see the RS line
Moving up.
confirm. And there's your new high.
Semiconductors. Here's the OPEX on here.
Ugly.
Here's Mutual. We got done with this. That is the last one I've got. This is my meetup. My own list's actually shorter than this, then I go into the other list. Something else.
Great.
What do you want to do next?
Let's look at some screens. So if we're really in a strong one, did we populate anything?
I don't know, I just always look at potential leaders in
So
Oh, look, it's-
there's your 3 semi leaders. So that was a heck of an opportunity to buy the 50-day moving average.
I gotta put it on.
Blue dot source.
volume's low.
Well, it's on the weekly and we're only at day 2.
I put it on.
So the equipment side, so what that's telling you is all the manufacturers are basically buying the equipment to get their factories loaded for the next ramp. So while they're building the factory, we're going to have a correction and they're going to take off once those lines come on board. That's the semiconductor cycle. So you're going to have a 3-month lag where the equipment's been delivered, you got to get it installed. So those engineers need to get the the equipment on board so that the equipment vendors get paid. That's the next part of this train. Watch lamb research, that's the leader right now, and when that reverses, you want to pay attention.
Alright, so now I got, this is our leaders list. And I did put this on, I didn't have time to print them out this time for people that don't have any of those, but I did put them on the meetup site for tonight's meeting.
So let's sort it by industry group.
Oops, did I pass it? You want, probably there, Katie, right here.
Aggregations,
I think you have to hit it twice to get it to reverse.
Yeah. That's way down here. Did I get it the right way?
Yeah.
Alright. Then,
So you got 4 leaders there.
that was the one we already saw.
This is the small cap. These are the 2 big boys, and that's a kind of a mid cap. Then this is your next leader. This is a sector leader, ANET. This is a foreign stock, ADR. This has spotty volume, so that one's, you basically got to buy the dips, or buy at these lines. Look at these 3-week tight. So one of the things when you lose that due to a litigation issue and it recovers right off the bat, O'Neill basically says when you're buying this back, you're adding 10% if you got shaken out here. And that 10% additional shares would have paid off big time. And now you're off to the races again. So these are China stocks. I would be careful. The reason why I say be careful is because the China markets are the only markets right now that aren't doing the global acceleration like everybody else is. But the ADRs are still going up. The broadcast name, that's hard. It's starting to live below the 10-week line. So microchip, these are the manufacturers. So again, one of the things that you can tell that the semis are leading, it briefly went out of the top 40 and now it's screened back to top 12. And all these blue dots are highlighting.
Here's my favorite 80.
Yeah, I don't think you're getting to 100.
Well, it just broke.
You might get to 85, but you might not get to 100.
What's it, 107?
Are you talking about microchip or another stock?
The last one.
Yeah, thank you.
It just broke 80.
Go back here.
Where do you want to go?
ADI. Hit the daily. One of the things that you guys want to pay attention to on daily charts when you see this happen, okay, never mind. I thought that had a significant hook down. It might have been just the chart updating.
So why?
But the analog, look at this. One of the things I also told you is the analog typically are the ones that lead the rally down. So now you're down to 2 stocks, ADI and Texas Instruments. TXN, you want to pay attention to those because they're now living below the 50-day, at least ADI is.
Here's TXN.
This reported after hours and that was ugly. So they reported good earnings. So if TI starts catching up with ADI, that would be a good indicator. ADI is absorbing their latest acquisition. That might be the reason why it's struggling.
Yeah, it doesn't skip.
ES and NT, that insurance sector leader.
Do you want it?
So one of the things when you see these violent tests, you want volume coming back in and you don't want it closing at the lows of the day. So whatever your green line is,
30.
the 30-day line is hugging support.
See, there's that what we were looking at before.
And you're getting a lot of selling at the close. And it's starting to be gappy type action.
That's supposed to be a leader. You also got to remember there's EPS 6 days. You got to look at some of that. Service now.
So I guess Oracle didn't buy them.
Take
That's ugly. That's what I was talking about. When you see the moving average, that can also be as you're making new highs and you're seeing that. That's called new highs on low volume.
So you're telling me that's a good put play.
I would be paying attention to that one. Because that is not healthy.
It's your paycheck.
When it got close to 61, I gave it a 20-cent trailing stop, and I got stopped out at around 60.05 yesterday.
Close.
Is that Illinois? No.
Leisure services.
Wow, look at that.
That's a timeshare thing.
There would have been our secondary play to Marriott.
New high, right?
Marriott on vacation. Marriott.
AC, yeah. Which, you know,
Yeah.
I totally missed.
And new highs on lower volume.
Yeah, that's not good.
Not good.
See, now we're getting down to some. Here's an old dog.
Over Netflix.
We're in the C ratings now.
Yeah. All right, let's just do something that people want to see.
BBY.
I heard Netflix, so we'll do yours next.
One up on China news today.
Ooh,
Yeah.
It's a beautiful jump.
big jump.
Add to position or just wait and see? All time high, right?
Well, that's what it scared me. But, I mean,
Here's what I did. I got out before that. Looks okay now.
Stay.
Well, it sold off after earnings and it
Yeah.
gapped, or went up today on the IBD deal.
That's what I ended up doing. Okay, what else? What did you say?
BBY.
What is it?
Best Buy.
BBBOI.
BBY.
I'm not always good at getting these punched in.
Retailer.
so the breakout wasn't on impressive volume. Let's see what the selling looked like at close. If the volume came in then.
Wasn't in the lower part of the day, but there's some. Let's throw it on the weekly. Let's go through this like we usually do.
Like Tesla, right Tesla.
So 80, 67 CBB.
So you got a nice
LRE.
3 tight area for the handle
The
and
breakout now.
You just
Stage
wanted
two.
some volume,
Yeah,
so I'd
volume's
be,
kinda low, isn't it? Yeah.
Yeah, that's a little bit low. So let's look at cons. That's one that was in here before. I always like to look at the twin.
H.H. Craig went out of business. You guys see that?
Yeah.
Can't believe that flagship store on 96th Street closed.
That didn't look very good. Because these are your top related when they're over here. GameStop.
Well, Best Buy's the one in town.
The second is just not good. What else we got? Another symbol somebody wants.
Tesla.
That's a good one.
Yeah.
It's an energy company, it's not a car company.
Oh, okay.
Electrical company.
I'll believe you when O'Neill reclassifies out of the auto sector.
They're all short covering?
You got it all marked out.
So what do you do with it?
Shorts haven't
Take my
covered
mark-
yet.
Look at the short.
Take my marks back out of there.
So this is still, all these weeks blue are still good, so.
The volume is good too.
And there we got tight.
That's decreasing volume now.
Well, let's look at, yeah.
Well, that's what you want to see on the 3-week
What about
tie.
institutions on there? Are they still getting out or in?
A minus, so it's good.
They're still in.
Had a good day today. Closing up.
The
around-
RS is also pretty good.
Got earnings coming up on 5/3.
Earnings don't matter, just look at sales.
Was it because of a precursor of earnings that went up?
Alright, so which way do you think this is going? Bad earnings.
Down.
Sideways,
Don't go.
nobody knows.
Nobody knows.
Right now it's going up.
No, it's going up.
It's,
Short covering.
it's going up.
Alright, what else?
Momo
Symbol.
and
Momo. So what's your number one holding?
J.
Oh.
It is nice.
Oh, I got one.
I wish on that.
So here's Momo.
China
Number
Facebook.
one.
Yeah. There's your flags. These are good signs. Nobody's got any comments.
what are the flags you're talking about?
Really
Means
moving up.
8-week hold.
Yeah, it
If
means
you
8
bought it
weeks.
right.
If you bought them at that area, you're supposed to hold it 8 weeks to reevaluate. Because it's up 28% in less than 4.
So 1, 2, 3, 4, 5, 6, 7, 8. So we're in the 8th week. So if it loses the, what's your green line?
30.
Green line's 30?
No,
No,
10.
the purple one.
10 on there.
Okay.
So it's holding the 10. Look for it to pull back to